In today's show, I'm going to be looking at crypto's 8 biggest problems and looking at 8 projects which solve those problems, which potentially present a huge opportunity for early buyers as the crypto economy continues to build out over the next decade. It's going to be a massive show. These 8 projects really have a lot of upside, and it's a really exciting narrative that I think you guys need to hear about. So I'm going to be going through those 8 projects in today's show. But just before we get into that list, what a crazy day we've had on the markets. We've had a massive pump and a breakout from most altcoins, Bitcoin and Ethereum included, after the CPI came in 0.2% lower than expectations. We knew that if the CPI came in lower than expectations, then that would result in a positive rally for the markets. Obviously, this means inflation is coming down. What we want to see is inflation coming down so that the Fed can ease up on its QT, or its quantitative tightening, in the next FOMC, which means to a lesser extent, we could get a rate hike than previously expected. So that's exactly what we want to see. We want to see inflation coming down. We want to give the Fed a little less license to hike rates. And that is why the markets are responding positively, because inflation coming down means less rate hikes, essentially. That's the TLDR on what happened. And that's why the markets responded so positively. Bitcoin continuously printing these higher lows here. We could see it's still maintaining bullish formation. There is this key level of 24,269 that we have tested 3 times now. We're coming up to test for a 3rd time. It was looking kind of weak, but it's looking like it's showing a little bit of strength now that it's actually going to break to the upside of 24. If we do break to the upside of 24, what can we expect from Bitcoin? Well, to be honest, there's not much in the way of 28K after 24. I don't think we get straight there because obviously there are going to be some sellers, and you always have to think of markets as buyers and sellers and not just lines on a chart. I think a lot of people will probably take profits around the 26K region, but a breakout here would show, at least technically wise, based on TA, that there is some room for growth in this upwards direction, considering, we didn't really have many stops on the way down during that massive liquidation cascade in June. So positive for Bitcoin. It is looking very bullish. I'm not looking at shorts right now, because we are still in a bullish formation, and you'd be kind of crazy to go against the trend. And when you look at Ethereum, we also see that Ethereum is pushing up into this orange box. We could see that it bounced off this support line at 1732, bounced on the CPI news as soon as it was announced, and actually is now testing this major range of resistance, as you can see, indicated by this orange box here. Ethereum, once again, is looking like it wants to break through that resistance, and if that's the case, then 2,000 becomes the next target. I think 2,000 is a big enough psychological number to kind of force some sales, so I wouldn't be going too crazy on the longs as we approach 2,000, because then it has a big decision to make. But the announcement obviously is very bullish for crypto, probably sees the rest of this week altcoins and Bitcoin performing quite well. If history is anything to go by in terms of these CPI announcements, and obviously that's bullish for Ethereum. There was one trick though with this Ethereum trade and the altcoin trades that I talked about in previous shows, but you would have made a lot of money if you did this, and that's actually sniping the news. Just quickly, basically what I did last night is, as soon as the CPI was announced, I was on DB's Twitter profile. He's a news profile that makes these new announcements. It's one of the easiest ways to make money in crypto. When you know there's a big announcement coming, and you know that there's going to be a big market reaction to that announcement, you can actually trade the news. It's one of these events where the market is very tradable post CPI. So basically, the 30 seconds after CPI came out, I saw DB's profile. I did my own tweet, and I had BYBIT open. I opened a trade. I opened an ETH leverage long. In fact, I put in probably more than I put into any trade in the last few months. I basically loaded my entire BYBIT stack onto this Ethereum trade, low leverage, 3x leverage, wrote it up from 1750 up to 1850, cashed out, cut, quick in, quick out, and I made some lovely profits on that. So that is basically a tip for you guys. Next time there's news, make sure you have your finger on the pulse and you're not turning a blind eye to these announcements, because we knew as soon as CPI would come out, if it came in significantly above expectations, there would probably be a dump in the short term, and we knew if it came in below, like it did, then there would be a pump. So that was a big trading opportunity. So don't shy away from that trick in the future. Of course, the major caveat to that is that sometimes the market prices in these announcements, and if it prices it in, then obviously it's not tradable post-news. The market is forward-looking, of course, but on an event like the CPI, we knew there was going to be volatility, especially if it came in significantly under. So that was a good result, and that was very tradable. Congrats to everyone that got that trade as well. Just quickly, remember, 1 day to go until this BYBIT competition. I'm a little bit annoyed that the competition didn't start yesterday, because if it did, then I would have gotten that ETH trade under my belt and I would be beating Sheldon and Ram, which is my ultimate goal in this comp. But unfortunately, it doesn't start until tomorrow. But that means you only have 1 day to sign up to take part, to potentially win up to $100,000 cumulative here. There's massive, massive, massive prizes you guys can see from this spreadsheet here for people that come in the top 10. So there's only 1,400 participants, 10 winners. If you're 10 out of the 1,400, which is very possible, if you're even a half decent trader, then you could be set to win some decent cash here. So make sure, link in the description, you sign up for this challenge. We're going to be trading all over the next few weeks. It's going to be a lot of fun. Sheldon's going to be doing live trading, so make sure you're registered to get involved with that and trade with us in this trading competition. And obviously, if you are going to take part in that, you will need a Banter BYBIT link, a Banter referral link, which you can also get using the link in the description before you register to this competition. It's a $4,200 bonus. Link in the description to that. And yeah, make sure you sign up for a BYBIT account to get trading and join this competition with us. It is going to be a lot of fun. Links in the description for that. Make sure you get involved. And you guys know I go on my Instagram after these shows, and we do live trading. We do setups on my Insta after. I don't like to do too much TA on this show. Of course, I do a little bit at the beginning because I like to reserve that for my Instagram after, because sometimes it takes like an hour, 2 hours, and I don't want to live stream all day on here. So remember, we do that. So yeah, get involved in the description. It's going to be a lot of fun. So basically, the gist of today's video is the 8 projects that I am looking at to potentially fill the void or fill the gap with some of the biggest problems in crypto. We know that the projects with the most upside in this market are going to be the ones that perform off the back of solving real problems. At the end of the day, if a project isn't solving a need in the market, it inevitably won't succeed. I mean, look at any successful business of all time. Look at Apple. The reason Apple succeeded is because there was a gap in the market for quality computing at the time, and later there was a gap in the market for quality smartphones. Basically, any company like Google, Yahoo was one of the biggest browsers. You had Bing, you had all these other browsers. Google ended up being the big winner because it was the most intuitive. It had the best UI. It had the best search optimization. And then it ended up getting network off the back of filling that need. Any business, your local cafe down the road. Why is it successful? Because it fills a need. People want coffee. There's not enough coffee in the area. So a cafe opens up. It's all just based on supply and demand, basic economics. And if there's demand for that product and there's not enough supply, that product should perform fairly well. So your local cafe may be doing well, or it may be doing badly based on the demand versus the supply of local cafes in the area. It's no difference with crypto. Crypto projects that succeed and do very well in the long term are the ones that actually take advantage of the problems that they're aiming to solve. So in today's video, I want to take a step back, look at 8 of the biggest crypto problems, the biggest fundamental issues with Web3, and look at 8 projects which are solving these fundamental issues, and I think have potential to grow significantly in the future and have upside off the back of that. It's a pretty cool show, and it's all based around Tasha Lab's thread that she did. She outlined the 8 problems, and I'm going to outline the 8 potential solutions. It's going to be a lot of fun. So Tasha said, today's problems of Web3 are tomorrow's investment opportunities. Look for projects that solve these big problems of the industry. Without further ado, let's get straight into it. She said, adoption of new tech doesn't progress linearly. It moves in a staircase. Initial innovation, impact to those innovators as growth flattens. Newer innovators fix bottlenecks to enable further adoption, and another wave of growth, rinse and repeat. Basically, what this means is that there'll be products that step in to fill needs, to fill gaps in the market, to solve these problems. Newer projects are going to come into the market to further enhance these issues, and then that will obviously enable another wave of adoption. And then basically you can ride this cycle over and over and over again. So what we're doing is now in today's video is we're looking at projects which are setting themselves up for the next cycle of adoption. Potentially in the next cycle, these are the ones that could perform very, very well. And even before then, if some of these problems really come to the forefront of crypto, then we can see returns a lot sooner than that. But this is obviously a fundamental piece here that's focused on very systemic issues in crypto that could take a while to solve, and some of which I think are actually already being solved, Tasha. And I'm going to rebut some of these points as well. She said the first problem, number 1, is DeFi. Poor scaling for UX and DEXs. She said, obviously, DEXs make trading possible for a long tail of assets, but today they suffer a host of problems. A few problems that she lists are impermanent loss, large slippage, slow, unreliable transaction execution, and many of these projects try to solve them, but with sporadic success so far. Here's the thing to note. You've got centralized exchanges, decentralized exchanges. Some of the issues she points out here, like large slippage, impermanent loss, huge trading fees. A lot of those issues are already solved by centralized exchanges. Like, for example, BYBIT or Binance. One of those exchanges isn't going to suffer from large slippage. They have a lot of liquidity. They have very reliable transaction execution. But in DeFi, in terms of DEXs, they obviously have a little bit of a trade-off for some of that liquidity because they're going for the sovereignty aspect of you not having to KYC, keeping a hold of your own assets on your own wallet, being able to trade on crypto using a decentralized platform that isn't in the hands of a centralized entity. Now, as soon as you introduce that through DEXs, although those qualities are super important and they lead to adoption, there are going to be some issues that arise, some of these that she is naming here. But there are a few projects which I've been highlighting over the last couple of days, which I think do a good job at solving some of these issues. The first of which is obviously GMX. You've got DYDX, but I think GMX is the better example here because that utilizes a multi-asset pool to facilitate 30x leverage trading. It does have quite low slippage. It has low fees. And of course, on the investment side, it has very, very good tokenomics. Now, I won't go through it too much in today's video, but because I've gone through it in yesterday's video, if you want to look at my GMX video yesterday. But basically, GMX is kind of solving a lot of these problems that Tasha's pointing out here. I guess so will DYDX to an extent. So will Gains Network to an extent. But you have to look at the ones with the best UI. She says that projects that combine approaches of TradFi exchanges and DEX biz models to solve scaling and UX will obviously be the winners. I think GMX does this a fairly good job at this. It's got a very intuitive UI. It's very easy to use. They've got the phone app. So does Gains Network as well, who offer their G-Trade platform. This is Gains or GNS. We can see Bitcoin pumping in the background here. Very nice app to use. And if any of you have ever used these decentralized perpetual DEXs, so they're basically like a BYBIT or a Binance, but it's your decentralized version. Of course, there's a trade-off in terms of liquidity, but you do save on the counterparty risk element of not having a centralized entity in control of your funds. So, I mean, definitely a merit to trading on BYBIT for like leverage trading. But if you do value sovereignty, then these DEXs are going to be your solution. And I think, although they're not perfect, they are by no means solving the issue now that Tasha's pointing out. I think exchanges, look at this pump in the meantime. I am on the 1 minute chart, to be fair, but these exchanges are going a long way to kind of solving these issues in the long term. And obviously a lot of these projects haven't solved them right now, but it's about identifying the projects that could. And I think that's the major element that a lot of people are mistaking. A project doesn't need to have a perfect product now. It should be working towards a perfect product, and you should be getting in early before they have a perfect product. And GMX and GNS are the two that I think have the most potential in the perp DEX space to actually offer that. DYDX, of course it does. DYDX is an amazing project, but it is a slightly higher market cap, and I think it's kind of run a little bit more than the others and doesn't have quite as nice tokenomics as the GMX does. So that's definitely one to look at off the back of this problem that Tasha's outlining here. Problem number 2. No real economy integration for on-chain lending. She says that lending demand for decentralized money markets / banks almost comes solely from speculation. She says there needs to be a change in DeFi lending if DeFi wants to attract more liquidity and user base. I 100% agree. So far, we've seen borrowing and lending being highly driven by speculation. This is an issue because you do need a real economy to incentivize the massive growth of on-chain lending, on-chain borrowing in the future. And we need to see real economies being integrated into this. What does this mean? Potentially projects that are utilizing real existing lending products with crypto. So projects that you can offer a real life asset, for example, some shares off the share market or commodities like oil, like gold, and that actually have them available for collateral on borrowing and lending platforms. That's definitely an investment angle that Tasha alludes to and that I think could be quite prominent in this space going forward. So you have to look at solutions like that, which can actually offer a real-world economic aspect to these borrowing and lending platforms. In the future, if Bitcoin and Ethereum become what we think they're going to become, if Bitcoin gets mass adoption on a global scale as a store of value, Ethereum becomes kind of that go-to gas token powering the ETH network that eventually ends up gaining mass adoption and creating its own internet of sorts, then of course these assets in and of themselves will increase demand for borrowing and lending. The more participants in a network, the more demand you're going to have for borrowing and lending. So I wouldn't fade the fact that crypto can definitely get there in its current state, but she's right. It would definitely help that companies that already have distribution mechanics and that already have real existing lending products that actually get into crypto. This would definitely help this narrative a lot. One of them off the top of my head that I can think of, it's not a real world product, but it does introduce real world commodities and real world assets is synthetics. Now, it doesn't introduce them like for like, but what it does is it creates synths, or kind of like shards, but it creates synthetic assets of a particular asset from the real world. So the synthetics, SNX, for example, has gold, silver, cryptos, euro, oil, and stocks. It's not borrowing and lending per se, although that definitely could come as they build out their ecosystem. But right now, it is a platform where you can mint and actually stake these assets to earn a reward. And the trading fees between synths, meaning you can trade your oil, trade your gold on synthetics, the trading fees are paid back to synthetics holders, a percentage of them. And we've seen synthetics, off the back of its growth, become the 9th biggest protocol for total revenue, cumulative revenue over the last 180 days. So it's clearly a protocol that's being used. I mentioned it in yesterday's real yield video that SNX is one I've got my eye on. It's definitely a cool product. Probably opens itself up to regulatory risk a little bit, considering that the SEC is kind of clamping down on a lot of these projects. I'm not seeing too many people worried about it as of yet. Personally, as an investor, long term, I'm a little bit worried about it. I definitely think it's one headwind, but if we actually break down the project's mechanics, it's very, very cool. And it really solves a major gap in the market. So SNX is one that could solve this problem, but I think we need real world products that have infrastructure to actually enter Web3 as well. That's just going to come with time. There's no instant problem. There's no instant solution to that problem. Number 3, unreliable mapping with underlying assets. The point she's making here is that NFT tech today is primitive, and essentially they don't do the best job at mapping between the hash token on chain and the underlying asset it represents. So let's say you have a basket of goods. Let's say you have a house, right? You sell a house and you use an NFT to actually show ownership of the house. Obviously, the house is a real world asset. It's a tangible good that you have, you can live in, and you can rent out. Then you've got the NFT, which resides on chain. Now, although there could be legal ownership implications, meaning that NFT could represent that house, there's no physical way to put the house into the NFT because one's on chain and one's in the real world. And the exact same thing could be said for gold bars or stocks or basically any asset, like even a movie, etc. It becomes quite hard for that NFT to track that underlying asset because that underlying asset isn't directly built or lives on the blockchain. The NFT is a line of code. Now, obviously, there's legalities, meaning that code can legally represent an asset underlying. There could be a fund or like a trust fund or a company that holds these assets on your behalf, and the NFT token represents ownership. But then you are introducing counterparty risk in that sense because you have another organization which has access over those assets technically, even though you may have the legal ownership. So she's right in a way. There isn't great mapping for products. Now, you're never going to get mapping of a house because it's a real world product. That's kind of just an example to help frame the issue. But you can get mapping of digital products, and the NFT stack probably isn't quite there yet. So for me, what I'm looking at is projects that can offer real integration of NFTs into DeFi ecosystems that actually have a use case beyond just being a JPEG on-chain. And essentially, in the long run, the NFTs with utility will be the ones that end up succeeding. So I'm looking at infrastructure projects because I'm not a huge NFT guy. Johnny or Hustle in his gaming show, he's a much bigger NFT guy. He's in a lot of NFT gaming projects. I certainly think NFT gaming is definitely one great piece of utility. If it's a great game, then that is such an easy solution to the problem of NFTs not having utility, because if users are playing a game, they're going to want the NFTs, and the NFTs hold intrinsic value if there's a user base. But I'm more looking at DeFi because I'm more into DeFi, decentralized finance, and looking at solutions within that ecosystem that offer utility for NFTs. Now, although this doesn't solve the direct problem Tash is alluding to with the one-to-one mapping, I think a project like JPEG, which is offering staking services for NFTs, this is one major utility that we're going to see a rise in the future because it basically isn't here yet. We don't see many great lending platforms, borrowing, lending, or integration with NFTs and DeFi at all. It's another problem Tash is going to allude to later in the thread. And I think that JPEG is definitely a project that is aiming to solve one of these issues. Now, will JPEG itself solve the issue of lack of NFT integration into DeFi? Probably, maybe not. I mean, probably not. It's a low market cap, right? It's a high-risk project, but it's a good example of one that already exists and is already trying to build out an ecosystem like this. Obviously, it's an extremely low market cap. It's an extremely high-risk project, but you're getting onto the narrative early, and that's the point of today's video. It's all about being early. JPEG, just to give you a quick TLDR on what it does, is essentially a project where you can borrow and lend NFTs. It allows NFT holders, if you own like let's say a CryptoPunk, you can actually stake it. Etherock, Bored Ape as well. So they're starting with the big projects, and then eventually they're going to work down to the cheaper projects. You could stake it, earn a yield on it. So essentially, you turn your NFT from a static investment to a yield generating asset. We can see they've kind of gone for this retro theme on their site. They've got vaults where you can stake CryptoPunks, Ether, Rocks, Bathing Ape Yacht Clubs, Mutant Ape Yacht Club. You earn an interest. There's NFTs in the vault. You can borrow and lend against them. They have LPs as well for the PUSD, which is the native stablecoin of the JPEG ecosystem. And overall, it's a pretty interesting concept, and it definitely solves a need in the NFT space. This is one I've got my eye on. I think there'll be more that come out, probably with better products, but JPEG does have the first mover advantage. So that's just, one major advantage to a project like this. But I know there's a few that will be launching in the future that I think will really give some competition to JPEG. And competition is good because that fosters innovation, right? We need competition for these fundamental issues to actually be solved. So she actually alludes to this problem in the next point, which is poor integration with the rest of the blockchain economy, that there's surprisingly little interaction between NFT and DeFi. JPEG's one of them, but I think the other major one is yield-bearing NFTs. Now, this is a narrative I've been talking about for a while. Liquid Driver actually had these. I was a fan of Liquid Driver, and to an extent, I still am. It's fantastic tech. The Phantom ecosystem, it's obviously cooled off a little bit, but there's some underlying tech that Liquid Driver uses that I think is very applicable to the broader crypto and NFT ecosystem as a whole. And this is FNFTs. Now, FNFTs stands for financial NFTs. Financial NFTs allow you to earn yield on NFTs and can hold a basket of yield-bearing assets in an NFT. So essentially, you take yield-bearing tokens, you lock them in an NFT with a lock period, and that NFT is now available for staking on a crypto, or on a, let's say, any DeFi protocol that offers staking for that NFT, and you can earn yield on that NFT. Now, this is quite a big revolutionization in my opinion, because it is offering another utility for NFTs in DeFi. And I'll show you the project now. It's called Revest Finance. This is one that is building financial NFTs and is really at the forefront of programmable money, programmable NFTs. Just to give you a TLDR again on what they do, essentially a developer brings a project idea, wants to bring it to market. They aren't interested in taking the biz dev role. They would rather build out the new idea and sell the project to someone who's interested in the growth. Revest is one of the products that will do this. Revest locks their tokens into vesting, issues an NFT, represents the locked position via a smart wallet system, and now the team can verify and easily sell the rights to their tokens to an interested developer, business developer, or VC. This is one of the ways Revest makes money. So basically, new projects come to Revest. They want to bring it to market. They don't want to take on biz dev. They don't want to build it out. They don't want to launch, but they have a great idea. They can lock the tokens that they're vesting into an FNFT that represents the locked tokens. Revest obviously issues this, and they could sell these rights, this IP, to an interested developer. That's just one use case of NFTs that I think is very interesting with FNFTs. The other use case is what Revest is most known for, and this is obviously where they've deployed on Phantom, AVAX, and Matic, where you can hold financial NFTs for any DeFi protocol. For example, Liquid Driver, you can lock up your yield in this. The NFT holds your yield, you stake the NFT, and then you can actually sell this NFT. Now, what's the benefit to having yield locked in an NFT versus just a DeFi protocol, you may ask? Well, it's actually the tradability, because let's say you lock up yield for 2 years. That's now not liquid. You've got your tokens locked up for 2 years. You can't trade that. The market crashes, you may want to trade. This is where NFTs come in, and this is why they're so important, because now you have a tradable asset. You can list it on a secondary market, like an OpenSea or a PaintSwap on Phantom or a Magic Eden on Solana, and you can trade that NFT, which holds a specific value tailored to the assets that it actually encompasses underneath it. That's why it's quite cool, because of the secondary benefits it offers. Now, NFT markets are still quite illiquid, which means this technology is nowhere near ready. Once again, we're trying to get these projects early. We're looking at innovations early. And by the time they're ready, I think it will probably be too late, because FNFTs are definitely a cool innovation in the crypto space that is offering tradability of assets, once again, quite in the liquid market, but that is a problem they're going to work towards solving. Revest is at the forefront of this. Revest has a token. Revest is worth nothing. It's a $1 million market cap. I told you guys we'd be degenning a little bit today. Very, 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 very low market cap. JPEG, very, very, very low market cap, because these come into Tash's first basket of protocols that are aiming to solve these innovations. Now, will they be the final products that solve the innovations? Maybe not. Maybe there'll be a better product that comes in, takes their idea and eats market share. But these are the ones that are trying to innovate and push the envelope a bit. And these are the ones that, I mean, you can have a little bit of a play out. This is small money, of course, if you're investing long term. You kind of chuck away gambling money into these products because they're such low market caps. But this is where you can make 1000x gains. Let's just be completely realistic. You're not making a 1000x gain off Solana or Phantom or Polkadot or ETH. You're making 1000x gains off these projects that solve real world issues, or real crypto fundamental issues. Revest may not be the one that solves that, but it's one that is aiming to solve that. And I think that is the beauty of the innovation that a lot of these projects are offering. The next one is number 6. There's 2 more I want to share with you. Number 6, high cost and low performance of public blockchains. This is a very easy problem to kind of invest in. She says that the quest for faster, cheaper smart contract platforms was a dominant theme for the past 2 market cycles. The quest won't end anytime soon, given how non-performant blockchains are still, despite projects. CBDC network that they're going to be competing with, which is centralized bank digital currencies. They're centralized alternatives, and you've also got more ETH Killers and Solana Killers entering the fray. How do you actually capture upside? It's probably a video that I could go speak on an hour of, but I'll give you a quick TLDR, and that is Ethereum. That is the leader. That's what's gaining the mass adoption. You need exposure to Ethereum, and obviously its subsidiaries or the projects that are scaling Ethereum. So it's L2s like Matic, Optimism, Arbitrum, the ones that have been pumping recently. You know about them all because they've all been pumping. DYDX was built on Ethereum as a scaling solution. It's now moving to Cosmos, but you have multiple other ZK rollups, optimistic rollups that all work off the back of Ethereum. Ethereum is the major token to capture upside to that ecosystem. That becomes your obvious bet, of course, when it comes to smart contract adoption long term. But that is not giving you the most upside. The most upside comes from, as she alludes to, the ETH Killers, the basket of L1s that are competing with Ethereum, that are solving issues that Ethereum has, solving fundamental flaws that may not be ironed out for many, many, many years on Ethereum, like sharding, like scalability, like security that Ethereum has, but is working towards over the next decade or so, because these rollups are going to take a while to come to fruition. There's other L1s that are solving these issues now and potentially can gain some of Ethereum's market share over the next decade or so. These are hedges, though. These aren't your primary positions. Your primary position is in Ethereum, presumably. Obviously, this video is not financial advice, but at least that's how I'm playing it, with the primary position in Ethereum and these other L1s acting as a hedge. Some other L1s that are offering this, you've got Near Protocol, obviously offering sharding before Ethereum has even basically touched sharding, or it even began on its new upgrade called the Surge, which is obviously that major implementation to introduce sharding that may be years away. So Near Protocol becomes one hedge. You've got AVAX as another hedge, fast EVM compatible with subnets. You definitely have Solana probably being the primary large cap hedge against Ethereum with its solid state, single global state scaling economy. Solana's a very logical bet against Ethereum, a logical hedge. You've got ones lower down the list, obviously, like your Phantoms. You've got your Cardano. I don't love Cardano, but it's definitely a hedge. So hedging against Ethereum is one way to capture this upside that Tash is talking about, but then obviously not being too remiss of Ethereum itself, because Ethereum in the long run, that's what's gaining the mass adoption here. High friction and poor security of cross-chain operations. Cross-chain bridging, we've seen many, many, many issues with cross-chain bridging. Obviously, the exploits that have happened, the Nomad, the Ronin, the Wormhole, the list goes on and on. Vitalik is all over this narrative. He called it months ago on Reddit that there was fundamental flaws with bridges. We knew that, and we've seen it happen time and time again with these bridges getting exploited. What does this mean for your bags? Well, it means that investing in protocols which facilitate interoperability become a huge narrative in the future. If they're not already, they're going to become a massive narrative next cycle, because the people that don't realize bridges have fundamental flaws will inevitably realize it in the long run as these exploits keep happening. And a project that gains upside to the security sector, although there's like 10 of them, Polkadot and Cosmos are the big ones. I think Rune is another one of the big ones, because Rune essentially offers non-custodial swapping of assets. So you can swap Ethereum to Bitcoin or Bitcoin to any of these other assets, Doge, BNB, on one chain. You're not bridging from the Bitcoin chain to Ethereum. You're not bridging from Ethereum to Atom. It's on the Rune chain. It all happens on one chain, and you can swap assets using the Rune Omnipool and stake assets in the Omnipool off their native chain, but not exposing yourself to bridges. That is the really good thing about Thorchain, and that's why I invest in Rune, because I think it solves a fundamental gap in the market and a need for this investment angle. And the last one is the lack of non-crypto native projects with viable products. I did an entire video on this the other day. It was the video, I've forgotten the exact title. It's a video with the thumbnail of Amazon, and on the thumbnail of Amazon, it had a bunch of other Web3 protocols that are competing. In fact, if I can just find it really quick, I'll show you the entire show on it, so you guys have... it's a massive playlist, but I'm going to get it because you guys may be interested. It's called, Will These Altcoins Be the Next Google or Amazon? This video, it's a 1 hour video. It's massive. It goes through all the Web3 projects, which I think solve this need. So I basically have already solved this debate in an entire video where I go through like 10 very cool projects, which I think are solving fundamental needs between bridging the real world and the digital Web3 economy. This video is very long. The TLDR is probably the number one sector within this lack of non-crypto native projects with viable products that is creating a crypto project with viable products is the Internet of Things. This is probably the biggest niche under this issue that Tasha points out. And this niche, the Internet of Things, is essentially physical devices that operate on a network, on a decentralized network. So if you think about physical devices, they basically power everything these days. Think of your smart TV, think of your fridge, think of your Alexa, your Google Home, or even like, I don't know, like a heart monitor or physical monitoring for patients of a certain disease. Anything that can have a chip and connects to a network is under the Internet of Things. What does the Internet of Things needs? It needs connection. And right now, connection is not decentralized. The connection is not benefiting from the issues that Web3 can actually solve. And one of the projects that is solving that issue is Helium, HNT, which is creating a decentralized network of servers which power the Internet of Things. If Amazon or Google servers go down, bang, you lose your connection to basically every device. Even the other day, 2 days ago, Google went down. I couldn't Google anything. I'm in Australia, and I literally couldn't use Google for 5 minutes because Google went down. So let's say there's a big event and these servers go down, or I don't know, there's some massive exploit or something. Decentralization definitely has its place in that case. So a project like Helium or HNT is one that is aiming to solve this issue. It's one I talked about for like 20 minutes in this video, if you want to check that out. But Helium essentially becomes a bet on the Internet of Things, but in a decentralized landscape, which is one of the fundamental issues that arises from the lack of crypto projects with viable products, because we need decentralization to power these economies. HNT is one that actually does that. So pretty long thread. Video went longer than I would have liked, but that's because there's just so much to talk about. 8 issues, 8 projects that all solve these issues, and I think could be very prominent in the future. Of course, this isn't a buy signal to ape into these projects today. You have to work out what your time horizon is. If your time horizon is like 3 or 4 years, yeah, you can DCA into some projects that solve these fundamental flaws. This isn't like a quick play overnight. These are fundamental issues that will take years and years and years to actually iron out as we kind of work towards a more decentralized economy. And obviously that's the vision we believe in. We wouldn't be in crypto if we weren't. Of course, there's people here to make money. I'm here to make money as well in the meantime, but that's essentially where we're going with all this. So we may as well invest in the stuff that's actually solving issues instead of just investing in Ponzi schemes. I don't want to continue this conversation though, so I'm going to be going over to Instagram right now and doing a bit of live trading, seeing if there's any plays. I can already tell you right now, I'm looking for longs, but I'm going to see if Tricky, obviously my companion, my partner in crime, who we trade together every day, I'm going to see if he has an alternate opinion, whether he is actually shorting this market. I know he's been doing a little bit of swing shorting, so I'm going to see if he's doing any of that. So make sure you chill out with me on Instagram. We'll go through the charts. We'll go through what I talked about today, and I'll answer any questions you have. But also chuck me a follow. I do follow some people back that give me a follow. The Insta's growing nicely. Make sure you give me a follow. I've been posting some reels as well. These reels are like basically short versions of the shows, that like 30-second versions of the shows. And I kind of just go through some basic principles on reels as well. So if you guys like the short form content, I know attention spans are short these days. You've got the reels there. I do see some questions coming in on the live chat, but I will answer those questions on Instagram now. Link in the description. And yeah, let's hang out over there. I'll see you in the next one. Oh, just before we leave, I forgot. GALA Games, link in the description for their film node. Obviously, GALA Games is starting to launch their decentralized film platform, which is very cool. They're an official show sponsor. They've got a link in the description to their node. Paula, do you want to just play the trailer for everyone? Link in the description to check out the nodes there. Very cool product. Very, very excited for it. And thank you to GALA Games for sponsoring the show. Thank you guys for your comments. I'm live on Instagram right now if you want to head over there. Thanks for all the comments. Thank you, Coods. Thank you, Joby. Coods, the Instagram is popping off. It's going off. Thank you, SB. Thank you for all the nice comments. Joby's got his HNT miner running as well. So thank you guys. I'll answer any more questions you have in the Instagram now. Catch you later. Peace.